Hey, Professor. This is our presentation over our Globus simulation. Our company was Enron Footwear. Our slogan was building trust, reducing waste, and redefining footwear. I'm Brandon Mudd, the CEO. We have Matt Sudebaker, the CFO, Christina Denton, the CMO, and Margaret McCormick as the CSO. First, I'll go over just some broad overviews of the company. For year 18 leadership scoreboard, we ended on a game-to-date score of 112 with a staggering earnings per share of $16.34, with our last investor target being $7, nearly doubled what they were asking for. A 30% return on equity with an investor target of 28%, a year-end stock price of 376 and 62 cents, more than doubling the $180 target, and 100 corporate image rating, in which the investor target was an 80. And that 100 image rating was held for several years. We had a global differentiation strategy. We really tried to separate ourselves between ourselves and the other companies out there, and we did that by achieving a very high star rating or SQ rating that we continuously rose over time, and helping keep our costs down by increasing the quality of our facilities as much as we could. We tried to always be dumping a lot of money into our facilities to further the investment from our employees and make shoes at a much higher rate. This also allowed us to not accrue as much overtime as other companies would do if you were trying to keep up with demand, helping us keep our price per pair at a roughly $5.75 per pair. We really tried to do some overhead optimization by adding in machinery to help us produce those pairs quickly, and that goes along with the overtime production cutting. Overall, the company maintained a perfect image rating continuously throughout the years. Next we'll talk to Matt about our financial situation.
Thank you, Brandon. As you can see here, our global differentiation strategy served us very well. We generally saw our gross revenues increase every each year. If we move on to the next slide, you can see how we primarily made our profits from the wholesale segment, with the internet segment being a major component as well, and private label making up a smaller but still significant portion of our revenues. We generally did well in private label every year that it was offered. And as we move to the next slide, we will look at some financial ratios and our credit rating. We maintained an A+ credit rating for most years that we were operating, as a result of our low default risk indicated by our large cash cushion and our low debt to assets ratio. We ended year 18 with cash on hand of 74,426,000. That'd be millions. Which was actually slightly higher than we projected. Um, our our return on investment ended at 30%, which was also higher than we projected. Now I'm going to hand our presentation off to Margaret McCormick, our Chief Strategy Officer.
Thank you, Matt. Um, I would like to start with my responsibilities with developing the strategies that strengthened our global brand and supported long-term growth. In the next few slides, I'll highlight how our marketing initiatives, market expansion, wholesale partnerships, celebrity endorsements, and operational strategy helped position Enron as an industry leader. Our marketing strategy focused on strengthening Enron's global brand through digital advertising, retailer partnerships, and celebrity endorsements. These efforts increased customer awareness, strengthened brand loyalty, and positioned us competitively across multiple international markets. On the next slide, our growth strategy followed the hands-off matrix by increasing market penetration through higher digital advertising, expanding into new geographic markets with regional production, and broadening our product line to meet the needs of different customer segments. This balanced approach supported sustainable growth. For the next slide, our wholesale strategy emphasized strong dealer relationships by investing in retailer support, maintaining fast delivery times, and offering products that provided attractive profit margins for our partners. These initiatives helped expand our retail presence and improve customer accessibility. On the next slide, we partnered with a diverse group of celebrity ambassadors to strengthen our brand across different regions and customer demographics. These endorsements increased consumer appeal, enhanced brand recognition, and supported future sales growth. On the next slide, our value chain focused on improving operational efficiency through workforce training, quality management, material optimization, and efficient logistics. These improvements reduce costs, maintain high product quality, and strengthen our competitive advantage. Now I would like to turn it over to our CMO, Christina Denton.
Thank you, Margaret. So I'm going to talk about our corporate strategy and responsibility report, as well as some achievements that we achieved. Our operational efficiency is where these assets truly shine. All of our facilities consistently maintained 113% to 120% production capability utilization rate. By running at this hyper-optimized level, we maximized our manufacturing run lengths. The direct result of this efficiency is a dramatic slash in our unit fixed overhead allocation, maximizing profitability on every single unit we produced. Moving on to our corporate social responsibility initiatives, environmental sustainability has remained a core pillar of our operational model. We successfully transitioned to recycled boxing and packaging across our product lines to drastically lessen our eco footprint. Parallel to this, we heavily focused our capital expenditures on aggressive energy efficiency initiatives across our global facilities to reduce carbon emissions and optimize resource consumption. Since we were growing rapidly and we felt that we should concentrate more on a triple bottom line, so our philosophy was simple. As our company grows, our positive impact on global communities must grow with it. In year 10, we committed a baseline of 1% of pre-tax profits to charitable contributions. Over the life cycle of our operations, we steadily scaled this commitment annually, finalizing our contribution at an impressive 6% by the end of year 18. This sustained funding has dramatically altered our local community engagement footprint. Corporate integrity required more than internal compliance. It demanded full supply chain accountability. We implemented strict ethics training programs alongside comprehensive enforcement mechanisms. Crucially, we instituted a strict supplier code of conduct. This code serves as a protective barrier for our internal employee, holding all third-party vendors accountable to the highest standards of fair labor, human rights, and safe business practices. Finally, we recognize that our market dominance is driven entirely by our human capital. To invest directly in our employees, we implemented high-value workplace infrastructure upgrades. We added full-service on-site cafeterias and professional on-site childcare to support working families. Furthermore, we overhauled our production floors to ensure solid, high-visibility warehouse lighting alongside state-of-the-art safety equipment to maintain our zero-injury workplace and standard. On our next slide, you can see that we secured a global number one overall GTD rank with a score of 112, maintained a perfect image rating of 100 through exceptional corporate social responsibility, earning the Distinguished World Council Citizen Award for years 14 through 18. Mitigated severe standard superior raw material price and shipping tariff impacts by shifting to localized regional production facilities, overcame currency exchange risk by establishing stable regional pricing cushions. And on the last slide, you can see that we maintained a top 100 global ranking, secured 74 best overall game to date score worldwide of 107, and ranked 74th globally in return on average equity at a stellar 40% Q. Our peak game to date score reached a peak worldwide rank of 11 in the overall game to date performance, scoring an extraordinary 109.5 on the global simulator scoreboard. The global score and stock value tied for the 18th best overall GTD score of 109, achieved a stock price of $271.31, registering as the 92nd best valuation performance globally. And finally, we dominated the Triple Crown, captured 22nd best GTD score, 67th best earnings per share, and 68th best stock price globally, cementing industry-wide leadership. And the last slide, please. Questions and discussion. If you had any questions, needed us to go over anything, now would be a great time.
This will be the end of our presentation. Thanks, Professor.
Thank you.